before you ever place a trade, you need to understand one thing: what you're placing that trade on, the markets, and what these markets are. You've seen that you could, trade on with gold or currencies, indices, stocks, but I'm going to explain everything here, make it super simple, and get down to the basics. I don't see a lot of people explain it from zero, and there's a lot of misconceptions, and there's this fear and almost intimidation of viewing these candlesticks on a screen, but there really shouldn't be. And once you understand what it is, you won't be scared at all, and we can really dive into it. Essentially what it is, strip every fancy word, it's buyers and sellers agreeing on a set price. Right now you can see this is Tesla. I'm on TradingView.com. You can type it into your computer, your phone, or even download the app. It's essentially a software, a platform where you can view charts or create different things, strategies, indicators, but it's just a place where you can view these types of markets, right? So we can see that Tesla, like is a company, and what you see on the screen are just buyers and sellers agreeing on set prices at set times. So that tug of war that you kind of see of the market going up and down, that's all it is. You're never trading the chart. These are just other people you're trading against, and it's just other buyers and other sellers. So you can see on the screen right here that every single time the chart moves up, you can see the green candlesticks. It's signifying that the chart has a bullish direction, right? So every time it goes up, buyers are more eager, and that means bullish direction. Bullish, it's just a bullish. That's the terminology that you call it. So if we're bullish, if we're in a bullish trend, we're going up. If we're in a bearish trend and sellers are more eager, we're going down. But ultimately, as you can see throughout this chart, it's just buyers and sellers agreeing on a set price at a specific time. So right here, we can see right here, 369. That is when buyers and sellers agreed that this price of the share should be at this specific time. Right below, you can see on the bottom, that was 9:30 a.m. this morning. So the buyers and sellers agreed at that specific price that this share should be 369, right, of this company. So we can go and view other companies in different markets. Let's go into the S&P. What is the S&P, right? Oh, very scary. You've heard it before, but shouldn't be scared, right? So the S&P, zoom out, this is the big one. It is essentially the entire stock market into one number, right? It is the top 500 companies at once. This is the top two markets that you'll hear me talk about the most, and what most retail traders trade on, because there's so much opportunity to trade on, because it's so many companies and it has so much volume and so many buyers and sellers all at once that causes these significant moves up and down, these bullish moves up, these bearish moves down, and that's why people day trade on it, and that's why you hear this terminology, ES, the S&P 500, but it's the exact same thing. So I can go into Nasdaq too. It's basically the same thing, and what essentially this is just, if you ever heard of NQ, Nasdaq 100, it's the top 100 tech companies. So very similar to the S&P, but people trade on this the most because there's the most amount of movement. There's the most amount of bullish and bearish trends and variation in volume, volume is essentially what the amount of buyers and sellers. So if there's a lot of volume, there's a lot that happens. There's a lot of price that goes up and down, right? So we can kind of see where I'm going here. But essentially, it's just people, buyers and sellers agreeing on a set price. That's all it is, and that's all these markets are. So these are just the top. This is the second biggest U.S. index, stuffed into one. It's the top 100 U.S. technology companies like Apple, Nvidia, Microsoft, Meta. Same type of chart, but every single time you go on, look at day trading or anything about day trading, you're going to see NQ, you're going to see Nasdaq, because of how much it moves up and down, creating opportunity for people to find their strategy and their edge and how to trade the market, because there's so much movement, right? So that's essentially what it is, right? I can go into these other companies. I can talk about Forex, which is currencies, even crypto, which is Bitcoin, which is the biggest agreement of buyers and sellers, because there's nothing else that moves Bitcoin. Now there might be some news events and some, macroeconomic events that plays into this, like banks kind of backing it now, but ultimately Bitcoin is nothing. It was just buyers and sellers agreeing that it was something, but that's what the entire market is. It's just buyers and sellers agreeing that this is valuable. And yes, some things back in, some things make other things more valuable than others. Like we can see gold right here. Let's go view what gold is doing, right? Gold futures. And this is a physical item. How can you trade a physical item? This is just what the price is of that physical item. So right now, 142, buyers and sellers agreeing on a set price. That's all it is. That's all you need to remember. If you remember anything from this video, the bullish trend, bearish trend, buyers and sellers agreeing on a set price. I don't think you'll have this option. TradingView, I have the premium version, but you can look on all these different charts, the S&P, gold. I can pull up another example here. Maybe you can NVIDIA, I don't know, currency, euro, the dollar, Tesla, so stocks, Forex, the S&P, technology companies, gold, a physical entity. Again, it's buyers and sellers agreeing on a set price, so it's not a big deal. Don't be intimidated next time you look at these markets. But the real question is who are these buyers and sellers and who are you trading against? Because like I said, you're not trading against a chart, you're trading against people. Stay tuned for the next video.